Good afternoon, everyone. Where's Adam in the room? Is he in the room? Yes. Congratulations on your epic timing for this, because I think no one had viewed that this date was so close to the publication date. It was a review last week, so talking about someone who knows where the markets are, I think QED sets a high bar. So well done. I think it's interesting to start sharing with you a little personal trauma. In '85, I was involved in trading myself purely on my own account, for my own risk, on an exchange. And I received the information at my, what we called in Holland, the teletext system, CFAX in the UK and elsewhere. I'm sure you're aware of what the systems are like. And every 15 minutes, I updated the system and I had fresh data for free. And it was absolutely wonderful because I could trade onto new data after 15 minutes. And every time the 15 minutes is mentioned in the market data consultation, something going on in my mind, which I don't think is healthy, dates back to my college days. And that sets the tone. I think we ought to look at history a little bit of, first of all, where we are. And see how this works. Hey. Missing a page, but maybe they can control it from the back, page one. There you go. So prop trader is really someone who is unknown to you. You see principal traders, market makers, very rarely openly speak or in the market, purely because we don't serve any customer base. We serve the liquidity in the market. And we see pension funds, we see exchanges, we see the buy side, and others on the sell side operate. But actually all the 28 members we represent as EPTA are competitors from one another. We do with our own money, like I did with my few savings I had in '85, for your own risk. If you lose money, obviously your own account is at play. Nothing too spectacular, but liquidity is very spectacular in the market, and we need liquidity. If we don't have liquidity, obviously there is something in the market which is wrong. Tilman was talking about lessons and Gavin was talking about the history. If I mix the two, I have one history lesson for you. And I won't call it another trauma, but it certainly happened during the early days in 2004. And I read it out from the MiFID directive in 2004. MiFID should support a competitive order execution market regardless of trading venue. We have that. We have SIs, we have MTFs, we have the whole spiel. We need equity market transparency rules. We need best execution rules. And we need rules governing the consolidation and dissemination of trading information. On top of that, support choice of trading venue. So this is all about competition in the equity markets and for platforms. And how do we accomplish that? And we accomplish that by building a consolidated tape, opening up the market data, and the big elephant in the room, which we'll come to next year, is open access. These are all parts of the message we were given in 2004 that we have to deal with competition in trading venues. So it is our task to bring this to an end, and that's why we welcome the very quick response from ESMA, the quick review on this first component of building competition in trading venues. So I will take you through, and I'll let you quickly read on what else we do, but I will take you through what we think where ESMA had it right and where we think we can go with a couple of recommendations. The beauty of our business is that it's not complicated. So we have data and we send out a lot of data. That is our members. And the members have an enormous amount of data, and we used to send it to one exchange, but now we send it to Maybe some send it to 170 platforms, I don't know, but certainly multiple of platforms receive the same data at the same time. And that has changed, obviously, with more trading venues, we have more data. But we send out data, our members send out data at the same micro, if not nanosecond, to all these venues. So they always argue that they still own the data. I'm not going to go into that. I think it's a legal battle. But the data is out there, and the data should be for everyone to read and for free. So we are very supportive of the consolidated tape because we think our members who supply the data would like to share it with the bigger audience possible, the biggest audience possible. So here's just a summary of what we put out before. The risk of not having a CTP, as you all know, the provider, is that a reliable view on liquidity in post-MiFID II fragmented markets will remain inaccessible for the majority of market participants. Very strongly advocated by our members. Members also envision consolidated tape would first and foremost be used for evaluation of post-trade best execution, a tool for investors to monitor the executions and the cost. It's interesting because in the report I think best execution is mentioned, but it's not like the highest priority where we think. We're not an end user, but we're providing liquidity to the end user. That is extremely important, and that's the message we were given in 2004 as well, focused on best ex. Hindering the establishment of an equity CT is the complexity of the exchange market data and its contracts. Gavin alluded to the technology. The challenge lies with the inconsistency of the data, the quality and the disparate delivery of the mechanisms. I think there's an initiative from the fixed trading community now to get together as well in one of their working groups, which we highly welcome, which could also help, I think, the Commission in the next stage of this. We believe a reliable source of intraday prices will help boost the activity on lit markets. I would just pause here. Lit markets are key. We support lit markets. We think we need to drive the business to lit markets as much as we can, and we think this is a very important tool to get that basically on the lit books, lit markets. And combat trends such as volumes consolidating at the close and the end of day auctions. We see at the moment that a lot of the trades are done at the close, so over 20%, some have volumes over 25% of the transactions are now being done at the close. That is a move which is unforeseen, unexpected, and we also think, our members think, that consolidated tape could be helpful in solving that problem. We'll create a better and cheaper access to the quality market data for all market participants, give the investors a complete overview across Europe of the fragmented markets, which we have obviously helped to create. Competition is out there in the markets. Build more trust and therefore volume in the markets, deepening that liquidity to help the end investors. And it will help democratize the latency of the market data for all participants and act as a catalyst for the CMU. So these are things we think are what our members are thinking and saying, and as we put in there, and there was good reception out there for these. If I move on to basically our last slide on this, the mandatory and free contribution of data to the tape by trading venues and APAs is what was mentioned. We fully subscribe to that. The revenue sharing, which is a very interesting topic and needs to be debated over the next few months, of course, if not longer, between the consolidated tape provider and the contributing entities, is a topic we support. Strong governance framework, obviously, it needs to be completely balanced, neutral. Real-time post-trade data is where we put the emphasis on, not just post-trade data, it has to be real-time. hopefully including third countries such as the UK and Switzerland. UK, obviously, we still don't know, but we expect that there is a big third country out there soon. Now, the recommendations, probably most important. Going back to 2004, seeing where we are, Tilman made a comment already, 5 to 7 years, it will take a lot of programming time to get this all together. But really, we're 20 years after the fact that at least I was first involved in the word consolidated tape back in 2004, which is quite dramatic. It won't leave me another trauma, but I think we're here to serve the community and try to speed it up as much as we can. The revenue model, we need to get into that detail. We actually, with members, have a very clear view on this. The contribution should be on executed liquidity, weighted by the value, i.e. the price forming trades weighted more heavily than the trades executed under a waiver or in an auction. All focused on bringing liquidity back to these lit markets. 100% is definitely, 100% coverage is definitely vital, but the use we should not mandate. It's up for everyone to use it for. As already mentioned, the US has made a mistake. Now that sounds a little bit like after the fact. They have a different market structure, so we can start from a completely clean sheet here. So we agree we should not copy the US model. And the use of the consolidated tape is not compulsory to meet best execution requirement. That's another point of attention which we like to address. So those were our remarks on the basis of input from 28 members and 28 members who clearly supply over 40% of the liquidity in these markets, prefer lit markets, and definitely like the transparency to be added to that even more. So we're here to basically serve the ecosystem of competition for the trading venues with transparency, with market data and a consolidated tape and open access, basically to lead the competition. Thank you.